This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time with Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Thanks for having me as always, Michael. Let's do this.
Absolutely. So folks don't know if they haven't watched your playlist, which they absolutely should. It is amazing, especially if you're interested in the markets. You are a 10-year plus Wall Street veteran, correct?
Correct. That is correct. 10 years, a little over that. Yeah.
So the reason I wanted to put that right up front is I believe for the first time in my 30 years of watching the Federal Reserve, Jerome Powell walked right over to Wall Street and give it a good old strong right kick on Friday. A quick 8-minute, succinct to the point, $1,000 down day. We've got the Richie Rich like Bezos and Buffett losing $78 billion in 8 minutes. So I don't remember a Fed chair ever directly just walking up to Wall Street and kicking you in the nuts like Friday. What do you think?
Yeah. I mean, the market got eviscerated in short order. What was the S&P was down 3.5%. The Dow was down 3%. The NASDAQ was down 4% in a day. It's like, what?
And it just kept getting worse
absolutely
and worse
crushed.
and worse.
Crushed the market. Yeah. What was it? The worst day since June or something like that. In any other normal year, it would be like, this is the worst day this year. But this has just been a weird year where there's been so much back and forth ping pong in the market. Yeah. But you know what's funny, Michael? My take is nothing new was said. That is my honest take.
You know, it's funny you say that. I'm glad we're going to talk about this because your statement, I believe, is factually true, but I think missing a but. What I think happened is, yes, he said nothing new, but he also didn't say a few things he has said before. So I think that's I think what happened the last two Fed meetings is he said all this stuff, but he always had a comma, and then he said some other stuff, which Wall Street read as, oh, he's going to pivot. He's going to pause. I'm Kathy Wood. We're getting a September cut. All is good. Yep. What he did is he removed the comma and added an exclamation mark. You're not listening.
Yep.
We are going higher. We are going faster. And most importantly, if you're going to find anything new, my opinion, he did clearly say we are going to stay there a long time.
Yep. And we've discussed that a couple of times where they faulted in the 70s where the Federal Reserve chairman at that given time started, stopped, we got it under control. Oh, no, it's not under control. Started, stopped. Oh, no, it's not under control. It happened twice before Volcker came down and just laid the hammer on top of everything and cleared the way and got things, under control. And it was painful in the meantime. But yeah, you're not wrong. There was no buts in there. But I think what the funny thing is I think they just grew frustrated with the bounce in the market over the past 6-8 weeks.
I agree. I think they looked at
nonsense. Go ahead.
They were mad.
Yeah.
He was pissed off. He's like, you guys, too far, too fast. You're Kathy Wood. You're banking on stuff that's, fictitious and hopium. It's not there. What are you doing? And he's like,
and maybe why my take is different than yours, where I don't see as much but is that I just looked at the but in the prior comments and was like, that's a but. And we're not in a but state. We're in a state where they're saying we need to control inflation. Our target inflation, to reiterate, this sounds crazy right now. Their target inflation is 2%. We're at 8.5, right? Yes, we came down from 9.1 to 8.5. We're looking to get to 2%. And that is not, for context, that's not core. That's 2% headline inflation, which is at 8.5. Guys, we're just so far from there right now. And the market's getting so far ahead of itself. We talked about this, Michael. 8 of the last 9 times that they've raised rates, there was not a bottoming process in the stock market for another 16 months after the Fed stopped raising rates. They're actively saying they're going to raise rates into 2023.
Exactly. So we're talking maybe not 2024 or 2025. Hello.
It's crazy to say that aloud. And I know people look at us and they're like, yeah, you're crazy. What are you talking about? That's just what history is telling us. And again, the market is not something that it repeats itself over time and time again. But again, at the end of the day, the four most dangerous words, says Sir John Templeton, is this time is different.
Yeah.
And it's not to say that never, ever, ever plays out, but saying this time is different, there are patterns. You have to pay attention to them. And to think that the bottoming process is going to be 6-8 months before the Fed stops,
it's crazy.
Doesn't make a lot of sense.
It's nonsense. It's nonsense. I'm curious, what is the 5-year forwards today? Because I think they jumped on Friday.
Let me here. You keep talking for a second.
Yeah.
I'll grab them right now.
Yeah, because I think there's a couple of things. For the first time, I'm going to comfortably say that I think the Fed funds rate gets to 4 or higher before they stop raising.
I know. I'm getting mad at you for being right when it comes to this, to be honest with you, because I have been long saying, right? Yeah. I have been long saying that things are going to break down sooner. And I don't know. I mean, the GDP numbers are showing things kind of breaking down somewhat, but the inflation numbers haven't followed through. So 5-year forwards right now are at just under 2.5.
Oh, okay.
So they peaked a little earlier this year in April at like 2.6, 2.7, 2.67, I guess it is. And now they're back down at 2.5, but they were all the way down at almost 2%.
Yeah.
Just about a month and a half ago.
Yeah,
so that's some of the over exuberance that the market's exposing itself to, that it ran on so much, is that inflation's going to be under control. We saw this rollover from June to July, and that's just far-fetched.
The other thing that I saw that people just need to put in context is we obviously saw our president of the United States, Joe Biden, come out and say we had 0% inflation in July. Remember that? So somebody actually did the math, which I love when people do this. They said, what if, just what if we had 0 in August, 0 in September, right, all the way through the end of the year? Folks, headline inflation is still 6.1. Put that in your pipe and smoke it.
Ouch, ouch, ouch. So I'll add a little political zest on this, I guess I'll call it, is with this most recent student debt cancellation numbers.
Yeah.
That is, what's that going to do to inflation, right? So that's a $500 billion bill to begin with. And Harvard just did a study that says that will add 0.2 to 0.3% to inflation. Yeah. So what's crazy about it to me, and this is not, any political nonsense, but at the end of the day, what I look at it as is where I was a little bit like, hey, how do you come up with this number? Is on the high end, people get debt relief up to those that make $125,000 a year. Mm-hmm. Just for context, those that make $125,000 a year puts them in the top 10% of income earners.
Wow.
And that's who we're going to take $10 or $20,000 off their debt balance sheet. And if you're married, it gets even better. So if you're married, you have up to 250, then that all of a sudden becomes the top 7% of income earners. Wow. And so it's just a little bit of scratch in the back of your head. And now I'll add a little bit, one more of maybe this is a little bit of political gamesmanship here. Maybe, I don't know. We're obviously going into midterms, right? So midterms are right around the corner, right?
They're buying votes, Taylor? Tell me it's not true.
Yeah. So think about this. So think about, you look at the broad landscape, and employment is a huge factor as to whether people can afford their bills, yada, yada. Unemployment right now is at 3.5.
Yeah, 3.5.
College graduate unemployment is at 2%.
Yeah, I saw
Now's the time that they need it. Now's the time that this pill needed to be swallowed to fuel the inflation.
Well, we'll just have some fun with this because we're on a roll. Let's not forget, like 2 weeks earlier, they passed the Inflation Reduction Act. Which is supposed to go
there too.
Yeah, which is supposed to raise $300,000 by 81,000 new IRS agents or some nonsense, which is going to crush the middle class. Good luck with your audits, everybody. I've been through one; they're not fun. Right. And they just give away $500 billion. So we're going to raise $300 billion with the Inflation Reduction Act, which Joe Manchin signed up for. With a stroke of a pen, Biden just gave away $500 billion. And then we got Elizabeth Warren saying the Federal Reserve is going to kick us into a recession. Hey, Elizabeth, stop spending money, you silly person. Come on.
We put out a video today that talked about just the other funny thing about the political gamesmanship is right now, and again, we are getting political. And the best thing about being political for me is that I'm not a Democrat or Republican. I will throw stones at stupid shit.
I'll throw stones at everybody. It doesn't matter.
No one's getting a stone not thrown at them. But the funny thing is when you look at all the polling for Biden administration and where they're lacking and where people are unsatisfied with their behavior, it's inflation is the number one thing that folks are not satisfied with. And what is this going to do to inflation? So is it going to drive the votes? We'll see, but it's just really curious.
No, it's great timing. Again, strategic. And then again, let's not forget they have 1 million barrels from strategic reserve. We've had gas fall 81%. I just read an article literally before I got on the this video with you that more and more Americans are not living paycheck to paycheck because inflation is down. Gas is down 81 days in a row or whatever it is. Good timing.
I
Good
think
timing.
I think I saw that, but I think I also saw that 50%, over 50% are still in that
No,
camp.
yeah, it's
of
still,
living
it ain't good, but it's less than before, right? Spend it anywhere you want. So again, this is really funny. Again, I think the Fed, so let's wrap this up because we obviously have September 21st is an important day.
Yep.
In my
yep.
world, the Federal Reserve must deliver 75 basis points or they're not going to be considered serious. The market will reverse. Do you think 75% is possible? Are you calling 25 or 50?
Yeah, no. I think based on those comments the other day, that was him stepping out and saying, listen, guys, you've gotten ahead of yourself. You've said now that inflation's rolled over. You've said now that inflation's under control. And when I say you guys, I mean the market.
The market, right.
Bouncing 15% or wherever we're at. That is unequivocally wrong. This is not something that goes away quickly. We saw in the 70s what happens when you press pause too quickly. That's not going to take place now. We're going to have to stick with this path of raising rates because, again, we don't want this start and stop inflation and then have to get back on the brakes again.
Yeah. So the last thing to talk about is jobs number comes out this Friday. We will obviously talk next Monday. I think this is going to be one of those reports that good news is bad news. I think expectations is something like 280, 290. I think I'm going to say right here, right now, we come in at 403, which is a big beat. And I think that's just going to be more ammunition that the job market hasn't cracked yet. And Powell's got to smack us with 75. What do you think of that?
I would have said prior to the last report that you're way off base. But the fact that we put a double on the expectation in the last report at over 500,000 jobs added.
Where did that come from?
Yeah. So to your point though, well, I will, well, no, we're not through the summer yet. So this is obviously backward looking data. So what I'm getting at there is the fact that 85% of the jobs that were added, the last report, were service jobs. Yeah. And a lot of that is summer related, but that's not going anywhere in this report.
That's August.
So it probably doesn't bleed through until the next report at that point.
So again, I see a beat. I mean, let's be clear. Even if we hit expectations, Powell's got to smack us with a 75. The only
right, because the market's building in the expectation of what he's telling us what we need to think. So think it, and then you're saying he's still going to come in with the hammer regardless. And I don't disagree there. It would have to be a big miss.
It would not only have to be a miss, in my opinion, Taylor. It would have to be a negative number. A negative number might cause a 50, but otherwise we're getting 75.
And you probably know this number better than I would. I believe the number is like 404,000 jobs, the low 400,000 jobs are the average jobs added per month this year.
For 2020. 400,000 is that 403 or whatever it is.
Yeah. Right in that ballpark. So you're right on the screws there. The last one came in hot.
A double, dude. Not hot, dude. Smoking hot.
Well, yeah, but I'm going off of the 404 number, so it's not a double off of that.
No, it's not a double, but
But nonetheless, I think we come in above average. So I'm kind of with you on it. And again, to be clear, this is me reverting my course.
Yes,
too.
you are. Yeah.
But the numbers are what they are, and I think that the August payroll of summer that comes through is still going to be hot because those service jobs that were added, 85% of which was the additive number for the last report, are still going to be there.
Do you think there's any chance in heck our unemployment goes down? We're currently sitting at 3.5, which is a lifetime low, 1969. Do you think we could print a 3.4? I don't see it, but I just want to ask.
It would be, I think the job, because again, we're talking about jobs being added. So the bulk of the summer jobs got added prior to this print too, as I kind of talk myself through this a little bit. So I don't think it can come down. No.
Okay. I don't think
but it would be, to your point, good news is bad news. And us saying we haven't broken labor yet. So,
dude, it goes to 3.4. You can take out the sledgehammer. It's coming. It's coming. Taylor, where can people find you? Because you're putting out amazing daily content.
Yeah, thanks so much. Find us at Life Goal Investments on Instagram is the best place. We'll put out daily stuff there, everywhere ranging. We try to stay away from political, but it has been just a little bit on the student debt relief lately, but more economic market centric stuff.
Awesome. Thanks, buddy.